Hello, everybody. Welcome to Inventory Part 6. This is recording the inventory sale and then our multi-step income statement. So when we sell inventory, we have two separate things that are happening. We're going to record the sale, and then we're going to show that inventory. We're going to record the revenue, and then we're going to show the inventory leaving our book. So let's take a look at that right now. Okay, so how do we record an inventory sale? And the other thing we're going to do too is we're actually going to do a problem. But the way we record an inventory sale is the first thing I'm going to record the revenue. So how do I record revenue? I'm going to be recording it with a credit. So I'm going to credit sales revenue. Now I know that I'm going to be crediting sales revenue. At the same time, if I'm selling something that's going to be on account or for cash, my assets are going up, because basically the person is either giving me an IOU in the form of an account receivable, or they're going to be giving me cash. So we're going to debit accounts receivable. Okay, so, but at the same time, when we are selling inventory, I'm making the sale and I'm selling inventory. So my inventory is going to be decreasing. So I'm going to show inventory as an asset. I'm going to show a decrease to that asset with a credit. Now, the account that I'm going to go through in debit here is going to be something called cost of goods sold. This is an expense. It's an expense relating to basically the cost of the item that I just sold. So let's look at an example and we'll figure it out. On January 1st, I sold 400 bags for $52 each on account. The bags cost YYZ $21 each and were received by LGA on 1/3/22. The terms of the sale were 210 net 30. I'm going to change this real quick to FOB shipping point. Prepare the journal entry to record the sale of the bag. So I've done a lot of FOB destination. Let's do FOB shipping point. What day do I record the sale? I'm going to record the sale on January 1st because if I ship them, basically that's when I record the sale. So assuming that these were shipped on 1/1/22, that's when I'm going to record the sale. Now, how much do I record for the sale? Well, I sold 400 bags and I sold these for $52 each, or my sales price per bag was $52 each. So the total amount of the sales revenue I'm going to be recording is going to be $20,800. So I'm going to debit accounts receivable and I'm going to credit sales revenue for $20,800. Now, at the same time, I have to take these off of my books. Now, the cost, I sold 400 bags. So I need to have my cost per bag for 400. Remember, we have to take the inventory off of our books. I've got to show that inventory leaving. So right over here, the bags cost me $21 each. So right over here, I am crediting inventory for $8,400. Now, what's really important is that if you're taking my class or if you're taking any class in accounting, you need to know this journal entry, memorize it, right? We want to make sure that we know this journal entry. I've actually had students be asked this during interviews, right? How do you record a retail sale transaction? And they don't know, but you now know. And this is something you're going to want to go through and memorize. I had a student in my intermediate accounting class that was interviewing for a Big Four firm, and she didn't know when she was asked. And so she went through and she, got all my stuff. And she was like, oh my God, it's like, I need to learn this again. She didn't have me for a 1A, but there you go. Okay. So this is to record an inventory, to record sale of inventory, right? So right over here, this is the journal entry. Never changes, right? So we want to make sure we memorize this. Over here, my accounts receivable, I'm showing this as a debit. Sales revenue, I'm crediting. Again, this is how we record an inventory sale on account. I'm using the date of January 1st because if it was shipped FOB shipping point or free on board shipping point, this is when I go through and make that sale. Now, the other thing I wanted to do in this video is to introduce to you is that now we're moving over away from what we had earlier, which was our single step income statement, or revenues minus expenses equals net income. We're now in a different place. What we're now in is we're now going to be looking at our multi-step income statement. At the end of the day, the net income is going to be the same, but we need to show the users of the financial statement that how much gross profit do we make on our inventory sales. Gross profit, not disgusting profit, but the profit I made by selling my inventory. So let's just take a look real fast right over here. So this is Costco. This is a little bit of an older example, but if we look over here, they have basically their revenue, total revenue, expenses over here, other income expense. This may not necessarily be the best example, but let's take a look at another one. Let's go to our Home Depot and let's take a look at the Home Depot. If I come over here and look at the Home Depot, this is what I was looking for. These were the droids I was looking for right over here. We've got our net sales. We'll talk about that a little bit later. Less cost of goods sold, our cost of sales. This will be our gross profit. From this, we're deducting our other expenses, getting down our operating income, other income expense, and getting back down ultimately to net income. They call it net earnings. It's the same thing. So again, this is what we call a multi-step income statement because we want to show the user how much profit are we making off of the sale of our inventory. So that's enough for this video. I want to thank you for joining me here today. Please email me if you have any questions after watching these. Appreciate you liking and subscribing, and I look forward to seeing you on the next video.